There are always legal ways to save lakhs in income tax. But when you avoid or forget to disclose your income from couple other sources, is it a strategy or a mistake? In today's video, I will be telling you about 6 most common mistakes people make while earning their income from other sources and filing it in their ITR. So without further ado, let's begin. Hey there, welcome back to the Sonia Davar Show. I'm your host Sonia Davar, Chartered Accountant and Business Finance Coach, and on this channel, we share with you all the tips, tools and resources you need to start and grow your profitable business, save lakhs of rupees on taxes and build your own wealth. I know it's a lot to remember and recall while preparing and filing your income tax return for any financial year. And some people often forget to declare income from couple other sources like interest from FD, interest from saving bank account, dividend income and whatnot. To make sure that you don't make those same mistakes, I'm here to give you 6 mistakes to avoid when you are disclosing income from other sources in your ITR. So with this, let's begin with our first mistake that you need to avoid when you are earning income from other sources, and that is not showing income from interest on FD. When you make an FD with a bank, you earn a little higher interest than what you do with a regular saving bank account until the FD matures. And that's when a lot of people make mistake thinking that since you have not received the interest income in your bank account and the interest has actually been accumulated until the FD matures, you are not required to disclose this interest income that you earn on these FDs, which is completely wrong because the interest income on these FDs are taxable every year on accrual basis. So even if you have not really received the money in your bank account and you will receive this interest income only when your FD matures, you are required to show the interest income on an accrual basis in your income tax return in the year in which you have earned that income. So for this, all the banks will give you an interest earned certificate. If you don't get that, then most of these banks would also be deducting TDS on such income, and you will get this information of how much interest you have earned on your fixed deposits by downloading your Form 26AS. So don't make the mistake of not disclosing this interest on FD by thinking that you have not received this income in your bank account and hence you are not required to disclose it in your ITR. You are required to disclose this interest income on FD in the year in which you have earned it, and you can check your Form 26AS to know all the income that you have earned from FDs, or alternatively you can even ask your bank to give you an interest earned certificate as well. With this, let's move on to the second most common mistake that people make while filing their income from other sources, and that is not showing income from interest received from saving bank account. Now, many people are aware that interest on saving bank account is not taxable up to 10,000 rupees, and hence they consider that I don't have to disclose this income in my ITR because anyway this income is not taxable up to 10,000 rupees. But again, there is a lack in understanding here. The way the process works is you have to disclose your income that you have earned as interest from your saving bank account and then claim a tax deduction under Section 80TTA and Section 80TTP. So the tax deduction at Section 80TTA talks about tax deduction on interest earned on saving bank account, and this deduction is available up to 10,000 rupees. So if you have earned interest income from all of your saving bank account up to 10,000 rupees, you can take this tax deduction under Section 80TTA. Alternatively, if you are a senior citizen, then you get the deduction under Section 80TTP, which gives you a deduction of interest income on saving bank account plus interest on fixed deposit up to 50,000 rupees is what you can claim as tax deduction. So again, the same process works. You have to disclose the interest income separately as income from other sources, and then take this deduction under Section 80 TTA and Section 80 TTP, whichever is applicable in your case. With this, let's move on to the third most common mistake that many people make while filing their ITR with income from other sources, and that is not showing their exempt income. Now, income tax gives you a lot of exempt income such as interest from PPF, interest from Sukanya Samriddhi account or Sukanya Samriddhi Yojana, or any gifts that you have received from your relatives on account of your wedding, or any general gifts up to 50,000 rupees is exempt. But what is not exempt is not disclosing this information in your ITR. So the income is exempt, but it is required that you disclose this income in your ITR as exempt income. Don't forget to disclose this income, because years later when you receive this income tax officers can come and ask you, where have you reported this income in your ITRs? So what is the source where you have received this money from if you have not really reported this income in your ITR? And at that point in time, you cannot go ahead and revise the returns for all the years, and hence it's very important to disclose all of these exempt income in the year in which you have earned it or in the year in which you have received it. So for certain income like interest on PPF, you should disclose it in your ITR as an exempt income on accrual basis. And for gifts, definitely there is no accrual, because we don't accrue gifts every year. So it's definitely on receipt basis. So as and when you've received the gifts, you should disclose it in your ITR. Many people also make this mistake that dividends up till now were exempt, and hence they had never bothered about considering dividend as an income that they need to report it in their ITR. But from this year onwards, that is financial year 2021, for which we would be filing ITRs now, dividends are taxable, and you are required to report all the dividends that you have received in financial year 2020-2021 in your ITR. Disclose it in the section under the head income from other sources, and offer it for taxation as well. The fourth mistake that many people make while filing their ITR with respect to income from other sources is not disclosing income earned by child or income earned by your spouse who's not working, but you have deposited certain FDs in your wife's name or in your spouse's name or your kid's name. It is common for people to invest in the name of your spouse or in the name of your child, but the income tax does not consider taxation together as a family. In India, we pay taxes for our individual. So if you have made investment in the name of your spouse who's not working, or in the name of your kid who's again not working, any income that you earn out of those investments are clubbed in your ITR, and you need to disclose it that way in your ITR. So let's take an example. If you have gifted your kid let's say 1 lakh rupees, which he has made an FD out of that gift, so the gift is not really taxable in the hand of your son, or it will not really be clubbed in your income, because gift is tax-free for any relative. But the interest that your son is earning out of that gift will be taxable in your case, in your ITR, and you will need to disclose it as your income and disclose it under clubbing provisions. The fifth most common mistake that many people make is not disclosing dividends in your ITR. I did touch upon slightly on this topic while we were discussing about exempt income, but I have kept it as a separate category because this type of income is now taxable from financial year 2021, and any dividend income that you earn, you cannot simply ignore like how you used to think in the past that dividend income was exempt and hence I might not have to disclose it in my ITR. Do make a note of all the dividends that you have earned, even though the amount is very small, like 100 rupees or 250 rupees, you have to make the disclosure in your ITR. And the final mistake that I want to talk in today's video, and that is not disclosing the gifts that you have received and not disclosing the cashbacks that you have received on various cards in your bank account. If your friend has given you a watch worth rupees 1 lakh rupees, the entire value of that 1 lakh rupee will be considered as your income, and you need to report it in your ITR that way, because your friend is not your relative and any gifts beyond 50,000 rupees is taxable. So the entire value of that 1 lakh rupees watch is taxable as gift in your ITR. Similarly, if you have received certain cashback on various shopping that you do and the money hits your bank account, so there are two ways where you take discounts. One way of giving these cashbacks or discounts is you don't pay that amount and you reduce it from the value of purchase. But the other ways of taking these cashbacks is that you pay the full amount at the time of purchasing asset, like your MacBook or your iPad Pro or your iPhone, and then the bank will give you certain reward points like 5% cashback, and the money later comes actually to your bank account. And what we do with that money, we don't really report it as the income that we have earned, but that money is actually an income, and you need to report it in your ITR that these are the money that I have earned using cashback offers. So again, on these cashbacks also, you can either consider these as gifts, and up to 50,000 rupees gift are exempt, and if you earn these cashbacks beyond 50,000 rupees, you need to disclose them as your taxable income as well. And if you've earned any prize money or if you've earned any lottery, all of these you will have to disclose it as income from your other sources, and you cannot get away without disclosing those income. Even if it is like income from winnings, that you have won some prize and you have earned the money, you will have to disclose it in your ITR as well. So now that you know what mistakes you need to avoid while filing your income tax return when you are also earning income from other sources, go ahead and watch all our episodes in this series of mistakes to avoid in ITR when you are earning income from salary, income from house property, income from business, income from capital gain, and the most common 10 mistakes that people make while filing their ITR. And after you're done watching all of these episodes, then go ahead and file your income tax return for the financial year. If you have made any of these mistakes that we've discussed in today's video, don't forget to comment below and let us know what mistake you have made in the past. And if you really like the value that we've shared with you in today's video, don't forget to hit the like button. This really helps our channel improve in algorithm so that more people can actually watch and get benefit of the financial literacy drive that we are doing on this channel. And while you are at it, don't forget to hit the subscribe button and hit the notification bell so that you will get notified of all the future awesome content that is coming your way from our channel. With this, I will see you in another video. Bye for now.